Voxtur Q2 financials are out. So let's have a look at them. Is it good, bad, ugly? Let's take a look. What you see in front of you is what I got from Cedar Plus. This is the income statement. And as always, I want to take this and I want to put it in my spreadsheet so we can compare it from quarter to quarter. Okay, so here we have Q1 2023, Q2 2023. What do we see? Well, revenues grew. That's quite a surprise. So revenue from Q1 to Q2 grew at almost 4%. Gross profit from Q1 to Q2 grew 11.2%. Why did this happen? Well, because of continuous margin expansion. So now we just reached a level of 50%, which makes any company with a 50% or more gross profit margin, I consider to be an amazing business. Most of the businesses are very low margin, and the first thing to check is gross profit. So that's very good news. And if you can see what the gross profit margin were in 2022, look at this. They were 34.1% in Q1. Then in Q2, they dipped 33.3% because of the acquisition of an old technology. And then look at this. In Q3, they got better to 38.2%. In Q4, they got even better, 41.2%. In Q1, they got even better, 47%. And in Q2, now we are entering this territory of a fantastic business, over 50% gross profit margin. Now, why is this important? Well, because it has to do with the quality of revenue. I mean, look at this revenue here in Q1, almost 41 million. But what kind of gross profit did this generate? Well, 13.9 million. And then how do we compare this 41 million of revenue to today's revenue? Well, today's revenue is 29.9 for Q2, but gross profit is higher than what it was when the revenues were 41. So this revenue for today, it's a higher quality revenue because it has higher gross profit margins, right? And that's because we're continually shifting the business from, a service type of business where it requires more people to pure technology. And that's exactly what we want to see. That's why we see, the increase from Q1 to Q2, increase of 11.2%, margin expansion. Okay, then we go down to technology and operations. That number increased from Q1 to Q2 by 13.6%. Now, this number is lower than what it was in Q4, but it is higher than what it was in Q1. Then selling and business development increased 28% from 1.6 million to 2.2. So this number, I'm not surprised it increased, selling and business development, where they're selling new products, right? But this number, it's kind of in line what it was in Q4 and Q3, and even Q1 of 2022. It's kind of in line, about 2 million. The big impact is G&A, general and administrative. So remember how Gary started cutting everything that he could? What that shows a decrease of 4% from Q1 to Q2. I expect this number to be even lower going forward, but it's significantly lower from the 18.4 million in Q4 and 17 in Q3, 17.4 in Q2, 18.4 in Q1 of 2022. So overall, all the expenses for the quarter were about 26 million. They were a little bit more than Q1, less than Q4, a little bit more than Q3, a little bit more than Q2, a little bit more than Q1. So because the gross profit was higher and the expenses were almost the same as Q1, the loss is lower from negative 11.6 million to negative 10.9. But now we got to look at EBITDA and we got to look at cash flow from operations. So if we go down to EBITDA, look at this. Boom. EBITDA positive in Q2. That's quite a bit of improvement. That's quite a bit of improvement from the loss in Q1. And if we look at Q1 of 2022, then the loss adjusted EBITDA got worse, and then it started getting better. It got less, and here in Q4, it was almost EBITDA positive, and then we dipped below. Why? Because of the investments, right? And now we're back to profitable. So Voxtur is now profitable based on EBITDA. That is huge. That is very positive. Then we also have to look at the cash flow statement. So if I look at the cash flow statement, here, it shows 6 months. So it doesn't just show one. So cash used in operating activities. For the 6 months, it's negative 12, right? How much of the cash flow from operations was just in Q2? Because this is combined, Q1 and Q2. So we got to go back and we got to look at Q1 numbers. So that the cash used in operating activities in Q1 was negative 9 million. Okay, so I'm going to go back to the spreadsheet now. So it was negative 9. And because it's cumulative, in Q1, it was only negative 2.9, so that the combined number is negative 12 million. So this is combined. This is for 6 months. Okay, this is 6 months. Let me show you again. So this number, negative 12 for 6 months, consists of negative 9 for Q1 and negative 2.9, call it 3 for Q2. So what do we have? In summary, what do we have overall? Revenues grew from Q1 to Q2 in a horrible real estate market. They grew by almost 4%. I see it as positive. Gross profit grew by 11.2%. I see it as very positive. Why? Because of the fantastic margin expansion from 47% to over 50%. Then EBITDA went from negative 2.5 million to positive 500,000. Cash flow from operating activities decreased, then loss decreased from 9 million to negative 3 million. So that's again positive. So I see this business as progressing, going in the right direction. The margins are expanding. So imagine this now. The business is already profitable on EBITDA basis. In order to be cash flow positive, which now is just negative $3 million, it doesn't take that much. It doesn't take that much of revenues to now take the business profitable. So when Gary was talking about the business be completely net income positive, cash flow positive towards, Q4, right? 2 quarters away. It's not that far of a stretch. All you need is a few million from Blue Water, the new product coming in, and boom, and the business is profitable. So does it look like to you that this business is going out of business? Does it look like it's going bankrupt? I don't think so. Do you think any bank would have a problem with a business that now shows growth in revenue? But most importantly, what's important is the gross profit. Like if we just ignored this entire thing, and just looked at the gross profit, it's like it's growing very nicely, right? Margins are expanding. Cost controls are happening. EBITDA is turning positive. I mean, it's just around the corner, right? I can see the light at the end of the tunnel. So anyway, these are the numbers. Now you tell me in the comments below. What do you think? Are you happy? Are you not happy? Leave me a comment.